Welcome to the OBS instructional video series on how to use our new electronic services platform. My name is Stacy Bartel, founder and president of OBS Financial Services. Today we're going to discuss the video review. One of the many options we're giving our clients this year is a way to have your tax return reviewed by a video being sent out to you through email. What will basically happen is you go to your email, and inside of your email, you'll get an email from us with a video. Click on the video, view it or download it. It'll open up and go over what I'm about to explain right now. I'm going to do one live for you. So let's go back to our good buddy Wile E. Coyote and do his review. Hey Wile E, it's Stacy from OBS Financial here. Got your tax returns all done up for you and Roxanne, and I just want to make sure that everything is good before you sign your documents and we send off your taxes. So first page here, just want to make sure that your address and everything is correct because you are new to us. Please verify your social insurance number, dates of birth, same thing with Roxanne. If everything's correct and you have no questions at the end of this video, you can sign the DocuSign documents that we're sending and we'll get everything sent off for you. So for your tax return, when we did your tax return, you sent us a few tax information slips. We got an RSP receipt for $20,500. We had a T4 from Acme, as well as some pension income and some profit sharing income. When we look at your tax return, how that works for you is your total income last year is comprised of $67,479 from work, $22,000 from a pension. You had some taxable dividends from your profit sharing in the Acme company, and you also had $7,500 worth of taxable capital gains. As much as your capital gains in total were $50,000, only $7,500 of that is taxable. That puts your total income up to $101,878. Now, we're going to take a look at tax deductions, the amounts of money I'm able to take off your your income before I tax you. So your biggest tax deduction was your RSP, $20,500. You also had pension income splitting. You had $22,000 of income. I can take up to 50% of that and transfer it over to Roxanne. Since she had no income, we're moving over the entire 50%. And you also have a tax credit for the enhanced CPP contribution. Just to quickly talk about that, the government's increasing CPP required contributions to up by 67% over the next 7 years. For more information on that, you can go to our website under 2020 tax tips, go to Canada Pension Plan, Enhanced CPP, and I'll talk about how it used to be calculated and what we can expect in the future. Getting back to your tax return, once we factor in the Enhanced CPP, we have $31,560 worth of deductions, bringing your income down to $70,317. So off that $30,317, the provincial government wants 10.8% on the first $32,000 and 12.75% on the next 37. So they want a total of $8,328 in tax, less your credits. Credits are the amounts of money you're allowed to make before you have to pay tax. So in Manitoba, the first $9,626 that everybody makes, they don't pay tax on. You also get a credit for what you paid for CPP, EI. You get a pension amount because you had pension income. And we had a total of $3,305 of family tax benefits that you can claim. You also had medical expenses of $2,055, of which $1,728 you're responsible for. So we get an additional credit of $327 for your medical. That means the first $17,119 that you made last year, you don't pay tax on at 10.8%, saves you $1,848 or puts your provincial tax bill down to $6,211. Federal government's going to do the same thing, except for they allow you to make $12,069 before you pay tax. You get an age amount of $2,614. You get a spousal amount because Roxanne couldn't use all of her credits, so you get $1,069. You also get a credit for what you paid on CPP, EI, the Canada Employment amount, a pension amount, And since Roxanne's income of $11,000 was under her personal credit, she couldn't use her $2,000 pension amount, so we get to transfer that back over to you. In total, federal government's not going to tax you on the first $23,836 that you made, so that actually saves you $35.75 at 15%. Your tax brackets, first $47,630 made is taxed at 15% for a total of $71.45. The remaining $22,000 is taxed at 20.5% for an additional $46.50, or gross tax of $11,795. We're going to take your credit voucher of $42.07 off of that, putting your federal tax down to $7,588. So what does that all mean? You owe the feds $75.88. You owe the province $6,211. So your total tax bill for the year is $13,799. Last year, they deducted $15,747 off of your checks to go towards paying your tax bill. Because you turned 65, you also overpaid your CPP by $687, or because you're over 70, you overpaid CPP by $687, so you get that back. Your total credit, $16,434. We're going to use that to pay off the $13,799 that you owe, and you're getting back $2,634.48. As for Roxanne, hers is a little bit simpler. Her total income was $11,000. I'll show you here. And that was from the pension income splitting. Off that $11,000, she was actually allowed to make $14,069 before she had to pay tax. So therefore, she doesn't owe anything federally or provincially. She has a zero tax bill. However, when we do pension income splitting, because we took 50% of your pension, we also have to take 50% of the income tax withheld off your pension and give that to her. So she has a credit of $750 for that. She has a carbon tax rebate of $486, so she's getting back $1,236 this year. So all in all, between the two of you guys, you're getting back $3,870.48. Just a couple things to note that now, you were 70, you're getting to the point where we're going to have to start converting your RSPs over into RIFs, and we should build a RSP meltdown plan in order to reduce the overall amount of taxes that you're going to be paying on those RSPs that you've been tucking away. Anyways, if you don't have any questions, you can sign the paperwork we sent, and we'll get everything sent off once we receive payment. And then once everything's e-filed, we'll get you a full copy of your tax return sent to you by PDF. If you have any questions, don't sign the paperwork, send me an email, and I'll be more than happy to get you some answers to whatever your questions are. Once again, I want to thank you very much, Wiley, for your business this year, and I look forward to talking to you next year. Okay, guys, that's basically what you can expect out of overall income tax review by video. Again, if there's any questions that you have, you can always back the video up, go over it. Sometimes I'll go a little bit more into depth into something if I find that there's some issues or some things that I can point out. In this case, I try to keep it as simple and quick as possible. But really, that's it. So if this is your choice of how you want to get your tax return reviewed, we'll definitely get it out to you in this format and let you answer questions that way. I want to thank you for your time and continue watching our series on different ways we can help you out. Have a good day.